Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 1st, 2023. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES. Right now, a narrow range heading into the RTH Open. Just 33% of average, 20.25 points of range today, and it is inside the previous session's range at the moment. We do have Fed Day today. Today, FOMC statement and rate decision, 1 o'clock p.m. Central. That's going to give us another FOMC key level. The last FOMC key level we got here was September 20th, 45.02s right here, and you've seen price drop away from it. We have not come back to test it just yet. The time before that, right here, July, FOMC key level when offered here, also has not been retested since its creation here after the sell-off. So are we going to get another one? Do we see another sell-off and maybe a bounce back this way? Will we see price go bid, maybe fill one of the other ones and come back and test it? We'll see how it develops here, but the downtrend remains intact. We do have a 4-day narrow range that's now a 5-day developing, and not expecting today to remain a narrow range here to the end of the session. Again, late this afternoon here, we likely get some nice movement here based off the volatility of the Fed, especially after the press conference gets underway. So expecting somewhere in the vicinity of 60 to 80 points of range today, perhaps somewhere in 60-70 range. And for Thursday's trading, likely to see a bigger than average range. Right now on a 5-day narrow range compression basis here, you're seeing compression here on a 57% basis against the ADR, and 200 points of range is the 125. We've gotten that amount of range here multiple times over the recent month, 6 weeks, so we could see that again. Easily 200 points of range, maybe the average range is only recessed 150, so somewhere between 150 and 200 points of range could be seen ahead once we get a breakout from this range. If we get a failed new high in the downtrend here, that could be a huge continuation down toward 4,000 down below. 4,200 now, plus 200 here, we could be looking at a big time 200 point move up ahead. Okay, let's take a look here at the NQ. You'll notice right now, very similar price action to the ES, narrow range right now. Just 30% of average range here, inside day as well. You can see a 5-day build out here, very compressed, 51% of average. The potential for 800 plus points of range here, that's a high 125% ADR, seen it once, maybe twice here over the last couple of months. But an average range would be fairly easy. That's about 700 points. That'd be about right here. That's your 5 and 10 period average right there. 700 plus points of range. So 700 to 900 points of range up ahead. If we are breaking to the upside, could be looking at a move that takes us back up within this downtrending channel. Again, a failed new high to happen here in a downtrending PIMA, downtrending price action here. That type of action could lead to an outside day down with a nice continuation ahead. We do have NFP report on Friday. That's going to be big, in addition to earnings throughout the week, including Apple on Thursday. So Wednesday, Thursday, Friday could be a fairly high range portion of the week. If we take a look here at crude oil. Right now, crude oil up 2.25 points, or 2.25% rather, and has about 1.93 points of range. That's 63% of ADR right now. It's been averaging about $3 per day. Inside day at the moment, as we had a bit of a bounce back day. I think right now what's very important here is this market formed a little box right down here over the past session, yesterday afternoon, and throughout the pre-market here, and you can see price push back above that key range low of 81.51. That reaction right there could open up a return back to the middle of the range. 88.27 would be the key range midpoint there. So to reject this low, it was able to snap back to that midpoint before. Now we're rejecting it again. Could be a nice little bounce back point here. Now the rally here has been quite strong since about 1 a.m. Central Time. This thing has rallied to the upside. Any pullback into about 81.50 could still provide a defense and buying opportunity. Any higher low right now could be a buying opportunity for continuation up. But to continue to reject here, the 81.50s opens up an upside return to 88.27 until proven otherwise. All right, taking a look here at gold futures. Right now, gold pretty much flat on the day here. Not much in terms of a change from the previous session, but we do have a very clear uptrending market. Pima trigger zone being tested right now. We have fallen mostly flat. One thing we mentioned after the rally here and after the peak was that we could begin to go sideways here and develop a range, especially a range that helps to facilitate trade at the new price levels after seeing quite a bit of action here over the previous couple of months. Right now the range spans from about 1960 up to 2020, so you have about a 60-point range right there that's developed. This right here could be a buying opportunity for another round of strength, but it could also suck you in for a move in this 1960. You're kind of right at the center of that range right now. I know we have a very clear upward trajectory at the moment, but at the same time we've been stuck inside the range. So best case scenario here would be if bulls were able to take out the mid and open up a new high and stay within the trend. Otherwise, looking to avoid the middle chop of this range, especially if we fall back to 1960, that could provide another buying opportunity back up. So in the range, so you want to fade the edges with an upward bias. Looking at the YM. The YM right now, trading a very narrow range as well. 127 points, a 417 average, narrow inside day, trading around the previous session's midpoint. If you look at the current range over the 5-day period, not as compressed as the other markets, but this one's a little different. That strong reversal here that we saw off of Friday's low and then Monday's turnaround occurred right at the 32,800 level. 32.8 is right here. That's a big edge, and that's a big time reaction. It's a lower low reaction, and now we have kind of a digestive day here, a day that's setting the range ahead of Fed, ahead of NFP. If prices can find a higher low off the 750-800 zone, it could open up a return back toward 34,250 and perhaps even a move a bit higher. You have somewhere in the 34.6 zone that could be in play as well as this thing looks to snap back. So this is going to be interesting to see if this is an initial rejection and if bulls can continue to hold the 32.8. Remember, 1,000 point distributions off the 800, so 32.8 here, and then you have 33.8 there. Any pullback higher low could open up a 1,000 point move into the 33.8 level up above, just from a short-term perspective. Even if that bounce leads to another round of weakness up ahead, this could be the counter trend bounce up ahead, very similar to this move, or any move into the beginning of this channel. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.